So if you're looking for a high hit rate and consistent gains, you're going to want to be taking high probability setups. That means places or areas in markets or whenever you're looking at charts where there is a greater chance that the price is going to reverse back to the direction that you're predicting, more or less. Now, incorporating this into a hedging structure is really important. And if you've got a really high hit rate like we do, then you'll find that hedging gets a lot easier. So don't forget, if you want to learn how to do this for income, go underneath. Let's get on with another sim. So if we want to demonstrate solid risk management, we're going to have to take a very specific approach. Generally, if you want to get things consistent in Forex markets, you're going to want to be using very low sizes compared to your equity. That's specifically relevant within the hedging framework. And to make a hedging strategy work, the sizes have got to be minimal because obviously you're not using stops. It doesn't matter that you're not using stops, however, because on any significant drift, you're always offsetting your risk, at least some part. So we can demonstrate that again, as we always do. Don't forget, if you want to learn how to do this for income, we've taught many professionals now who sit with us every day as we trade ourselves. If you want to learn, just go underneath. There's also a free Discord link there too. Where you can get some free training. So to begin with, I will swap to higher time frames. I've done an intraday lower time frame video for those who specifically asked for it previously. I hope that helped. If it didn't, let me know. For this instance, I'm just going to take a 0.1 because this pop is not very heavy. It's not a massive push up, and it does leave the door open to potential falls further. Of course, there we go. So we've got gain 1. Okay, it's $118. I can kill that off. If I want to take a long here, I can. The level has been tested various times. It's sort of okay for longs, but it does look slightly weak. So I'm going to take a half size compared to what I took before. Okay, so I'm long, and I'm playing it a little bit quickly now on our daily. I could have probably killed that long off, but it was a little bit slow. So this will actually give way to a further long. And at this point, I'm going to put the long size up. I'm going to go to about 0.2. Okay, so that's reasonable for me. Remember, these sizes, although they are low, obviously they're tangible based on equity, based on the amount of assets you're trading at any time. So, the gains will always vary based on those inputs. If I speed this up just to get things quicker within this particular session, we will be able to see some reasonable movement at some point, whether it's up or down, doesn't really matter, because I'll always be hedging out of any problem, if you like. So you can see that we're climbing slightly. If I go on the weekly, we're now at early resistance. So I'm going to kill that off the gains. And I'm just going to flip lightly short, matching the previous long size, because the price is still relatively low. Nice fall there. And you can see now in play how this is working. I took a light short because the setup was poor. The chance of me being wrong was high, which eventually happened. You can see that because we fell through. And then my short I hedged that with has covered $117. Now, what's really key here is that the difference between these two is $90. Now, one trader would have lost, significant amounts because their stop probably would have been miscalculated and they would have been wrong. And of course, the fact that we're able to close $117, $118 means we're not really 207 down. And that's mostly how this strategy works overall. It looks like the market is seemingly bearish. You are pushing back some key demand zones or long side entry areas. I think for me, I'm just going to add a 0.1 at this area, not a 0.2 like last time. Okay, so decent moves up, and you can now see momentum following through like this. Okay, so you're not really getting significant pullbacks. I've got the decision with what I want to do with this. I mean, it looks like you're pulling to the upside, but even if you do come slightly higher, let's say 93.7, you're only pushing back to key resistance anyway. So I'm going to kill those two off. All right, so we're out for net gains. Now, remember that $118 we took? Well, I can spend most of that on that loss, and now I'm out for net gains. Okay, so if we get higher, wouldn't shock me based on that price action momentum. You can see that there. So I can add perhaps 0.05 twice. My exit is going to be in line with this channeling sideways movement. Okay, so we can see really what happens. Any higher push like that, I can add another 0.05, again, treading very lightly in case we're wrong, as always. And now I've got the opportunity to kill that one and hedge again, okay? So again, if you look at my equity, you can see it's way, way higher than the loss we're experiencing any time. Like I said before, I mean, that is tangible. You can change that if you want to, okay? But you really need risk plans to do that. Obviously, I can't demonstrate all of that in one session. Those are plans, behind the scenes for every single equity amount and trader type and hedging type as well, how aggressive you're going to go. But you can see that's another set of hedge long gains on these shorts. So I'm not closing these shorts and I'm still experiencing long side gains. I can also add a short in case we do fall and see if we get any short side gains. So at this point, I'm 0.2 exposed. If I kill that off for $33, I can now take another hedge long in case we climb higher. So 1/3 of the total exposure experienced on the short side currently. Any further dip, and I could consider adding to that. So something like this for a further hedge. This entry is now in gains. So clear that short out. It looks like the market is mounting to the upside, okay, with a upside trend movement. So if I want to, I can close these out. I think I'll hold off slightly. I don't think it's completely necessary for me to do that. Okay, if we do get more of a fall like that, then I can take that one for gains. And I could consider removing these two with the gains accrued, including many hedge gains. And again, that leaves me in a positive P&L, and it gives me the opportunity to add another long within this uptrending cycle. So risk management via hedging, is so important and so key when done properly with very light sizes. You can see I'm now out of everything on this swing. Okay, it's a reasonable swing, but I never really had any extreme drawdown. Okay, I never really had any main drawdown or anything even recognizable as a threat. And it's always going to be the case as long as you're using very small sizes. Now, in this instance, what we used, was very small. Don't get me wrong, mostly 0.05s with a max at 0.2. But you can see the hit rate and how high it is when you remove a stop loss. And that's really key to understand. Taking a stop loss out means your hit rate is going to go up, obviously, because you won't be stopped. And your gains that you're closing could be anything. It could be a net nothing to, a larger gain on the higher end of the scale. Okay, so that's really how we're working it here. And like I said, if you check every video I film, it's just continuous gains and ending in net gains overall. So the amount of trades, well, really, you can see, let's count. I can't scroll up them with the arrows, but there is, and actually I'll filter it like this. So we had 3 losers, all right? And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 winners, okay? 20 trades overall, 15% loss. And that sits at about the 85% hit rate I experience in my portfolio, and generally our members do as well. And if I just keep trading this cycle, the hit rate won't change. It will still be continuous gains, trading things like this. Okay, so where's my short? Let's get back to open positions. So again, out for gains, and then I can make a decision on where the market is. Well, I'd probably like to buy it slightly lower, but I could slip something in long just in case we come back to these highs. But like I said, as long as I keep the sizes low, my equity will stay in positive.